Welcome back everyone to a part three video on the challenge that I've set for 160 to $1,000. So I'll update you guys, of course, on how that challenge has been so far. Unfortunately, it hasn't been going as planned, but that's one of the main reasons why I wanted to also do a second weekly update um this week, rectify the way that I've been trading so far on this account. I'll share with you guys everything that you guys should know. And to start, let's go with a quote of the day by Mark Douglas. We can go with the type of the types of changes you will need. The types of changes you will need to make will fall into two broad categories. First, you will need to learn some sophisticated mental skills to adapt yourself more readily to the constant changes with which the market confronts you, which will require neutralizing some common held cultural beliefs about success. These are the beliefs that have the potential to distort market information. Second, you will likely need to undo any psychological injury you may have sustained from your previous trading activity. Any psychological injury diminishes your capacity to execute your trades properly. So, um, couldn't have said it any better. He pretty much this um in the Disciplined Trader with that quote, he pretty much stated, in other words, that trauma outside, um, anything outside of the market can be a disadvantage when trading. Um, Obviously, this is a psychological opportunity that we have in the markets. So if you take your stress from the outside world or problems from the outside world into the markets, most of the times it's not gonna, work out for you. And if it does, most of the times when you bring problems outside into the markets, whether that's and then that what it could do for you is cause you to revenge trade or over leverage, kind of like what happened to me this week. And it could lead to a blown account or it could lead to you profiting by over leveraging. But then whatever you're making from over leveraging obviously is not the right way. And whatever you don't earn in the markets, it's always going to be taken back most of the times. So that's pretty much what I took from that quote. And then also, of course, your environment plays a toll on the way that you trade. So Um, ultimately, I'll start sharing my screen next. First, what I want to go over is my conflicts that I had trading with this challenge this week. Excuse me. So, nonetheless, I'm gonna start sharing my screen next. So, um, conflicts this week. One of the conflicts that I've had, I actually didn't even I didn't list it in here. So, to start, one of the conflicts I've had was AUD NZD. It's like the slowest pair I've ever traded. I didn't realize it was this slow, so I completely took it out of my trading watch list because of how slow it moves, just to literally do nothing and stay exactly where, it's pretty much been for this whole entire week. And also, if you backdate and look at AUD NZD for like literally every week, you'll see price literally stays in one spot for like the entire week. Um, Honestly, these are not bad. Like maybe I was just upset, honestly. There's a possibility that I was just upset and really wanted to just, because, yeah, I mean, there's a chance that I was just upset, but at the same time, look at how long price just stays in one spot on AUD NZD. I mean, as a swing trader, 2 days, holding a trade for 2 days is not bad for a move. So there could be either one of two things that are happening. Either one, I'm a day trader at heart and not a swing trader at heart. Um, or two, I should work on mentally conditioning my mind so that to a swing trader so that I understand I have to delay gratification to see outcomes and understand that these outcomes don't result overnight. They don't result in, I mean, there's a chance that it could take 7 to 14 days. So maybe conditioning my mind to thinking in that type of way instead of looking for plays to play out within 24 to 48 hours. Maybe that's just not enough, especially as a swing trader. Which it's kind of obvious that swing traders are not looking for trades to just play out overnight. So, um, hence why I just said maybe I'm a, day trader at heart. So, with me learning a little bit more about how I think, um, in a larger scale, what I can also say about my feedback from how I've been trading this week is that, I took notes, so I'll pull up. Hopefully, I can find where I put the notes. All right, let's see. Where did I put those notes? Oh, NZD USD. All right, so on NZD USD, you can see, well, I had it blocked. All right, so one is the spread. So the spread, this is probably the only, you know, um, blame that I can give on somebody else. So I'm gonna get the blame out the way, and then outside of me blaming the brokerage on the spread, then I'll start blaming myself. So since I have the opportunity to blame somebody at first, I'm gonna blame the brokers because the brokers, the spread goes crazy, especially at outside of kill zones when we're headed to that 1 hour gap every day of the markets not allowing us to trade around like 6 o'clock or 5 o'clock. So around that time, outside of the kill zones, the brokerage creates such a large spread, which took me out of one of my trades this week, and it kind of upset me. Um, so yeah, the spreads sometimes can get ridiculous. Um, what other conflicts do I have for this week? Knowingly entering when the market is about to close. So this is kind of correlated to the spread because this did happen, where I got into a trade around the end of the day and the spread literally opened up around like 5 o'clock. So what I should do moving forward, what I will do moving forward is refrain from taking trades, even though the setup might look, like a good setup. Um, a lot of times it doesn't make sense to just willy-nilly trading around times that are not kill zone hours. Okay, so or kill zone time zones. So I could definitely improve on my part there. given trades more than two chances after hitting stop loss. So most of the time, once it hits stop loss, you don't even want to get in. There's very little times where once prices hit your stop loss where it might actually go in your direction. Whoever's in the markets, the market makers might just thrust price up to, you know, get price to where, they want to sell it from and then go into the direction. So, that happens occasionally, obviously not every case, but occasionally. And occasionally, if price does do that, there's still specific things that you want to look for before price even does that, or before even considering a re-entry after it's already hit your stop loss. So, um, I've 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 done that this week, and but I've given trades more than one chance, and then not only that, I've also this week I've also let me see if the next one is gonna improperly placing stop loss. So improperly placing stop loss is if I see that the trade has pretty much moved, kind of like gold this week. This gold trade that I had for this week. Wow, that is crazy. So initially, my entry would have been around here. Unfortunately, I was looking at the 30-minute time frame. So not a bad thing for me to look at the 30-minute time frame, but when I seen that price did this move up, down, broke structure, came back down, came up here, and then broke structure, I figured, oh well, we might actually be selling. But then price came up, came down, and then broke structure again. So I was like, okay, well, if I just considered this to be the lowest low and had kept my stop loss here, that would have been a really good price for us to buy at around here. This would have given us a 1 to 6. That would have given us a 1 to 6. All we literally needed was to consider this and consider this as our stop loss, and then we would have been Gucci. But instead, I I put too much thought into the market structure shifts that happened on the 30-minute time frame, which is a solid time frame to look at for market structure or direction. Um so what I'm going to do now going forward is I'm only going to consider I'm going to consider the first shift that we get on the 30-minute time frame or 15-minute time frame. I'm going to only consider that one, that first one. And once we get that shift on the first one, then I will use the high or use the low of that 30-minute or 15-minute shift um, for my stop loss. Also, because price closed here, I figured, oh, we might get, a stop loss or might get an entry around here because I did see that there was some imbalance here on lower time frame. So, but when price said here, 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 price gave us a market structure shift on lower time frame. So I entered here, and then my stop loss was literally below these lows. So that's what I mean by improperly placing your stop loss. The first shift that happens in your area of interest, your stop loss should be low here, but should be below the first initial market structure shift, not the shifts that happen afterwards. So that's something that I'm going to implement into my, trading strategy. Is it's going to be relying on the first market structure shift within area of interest. That's going to be my philosophy. My philosophy that I am changing and implementing into my system is going to be relying on the first market structure shift that happens within your area of interest. Okay. And because I didn't rely on this, in fact, my stop loss was right here, just below here. And I got taken out so many times on um, this gold idea for this week. Um, would have been a perfect trade. Especially if I think let me erase everything. So honestly, like if I could get any, like let's say if I placed an order, let's say I placed an order for 50%, right? Let's say too far, right? I can't risk 5%. Um, and then I said, okay, well, from here, I'm gonna place this right here, and my entry as the order would be here, target, new high. This would still be a 1 to 5. Literally, it'll still be a 1 to 5. Would have been a 1 to 5. Like, I don't see why. It just doesn't wrap around my head. I need to just trust the process. That's literally all I have to do is trust the process. But things keep getting in the way. I'm getting in the way. Like, not even things. I'm getting in my own way. Um, I'll be honest. I even let influencers on Instagram when with the way that they're trading and over leveraging. I even let them get in my head this week, which I caused my own self, got in my own way to over leverage and put more emotions into my trading. So um that led to me almost blowing the account. Like the account's equity went from where it was at all the way down to like $30. So I had to reinvest. I think now all I have right now in the account is like $100. And I'm still in this AUD CAD trade. So right now we're currently in profit, maybe $6. Not much. I mean, what was it? NZD was D. So what else did we have? We had improperly hitting close. So hitting close. Oh, hitting close trade. Okay, so instead of letting price either go to stop loss, or instead of allowing price to, excuse me, hit our take profit, what I find myself doing is I find myself like getting skeptical about the trade idea and then just pulling out of the trade completely. So pulling out of the trade completely and going against my trading plan, and while my trading plan is to either hit stop loss or hit take profit, really just objectively allowing the markets to do whatever it wants because it's going to do whatever it wants anyways, and just allowing the law of probability to give us the results that we're looking for. Um, I've already discussed that I've over leveraged, right? So I'm not gonna beat a dead horse and keep on, talking about over leveraging because I'm already upset about myself. If I talk about how I over leveraged, I'm just gonna get even more upset. And then we have revenge trading, which I've already discussed. I did allow other influencers, trading influencers that are over leveraging, get in my head about that. So, which I shouldn't have. I take full responsibility, and I did pay the price this week by reinvesting into the account. Um, Bringing it back to 160. And since then, it's already dropped back about $50, which is why we're at like $100 in equity. So that's how everything is going so far. I'll show you guys um I'll show you guys the TradeZella account. So the TradeZella account will give you guys a brief overview of how everything has been looking so far. And as you can see, -$8, -11, -131, which is the day that I over leveraged, obviously, and then -38. So definitely not what I wanted, but what is that? $8 plus $11 plus 131 plus 38. It's $188. So I pretty much blew the account plus more. Blew the account plus 20 because we started at 160. I mean, what can I say? Even over traded like 2, 7, 18, 19, 20, 21, 22. I took 22 trades in total in the week. It's like today's Wednesday. Obviously, that is improvement compared to when I first started. Because when I first started, you can see I was taking 50 trades, right? I was taking 50 trades for the week. So I appreciate that. I acknowledge that I've improved cutting out 50%, at least 50% of the amount of trades that I used to take compared to now. So I'm being more considerate in the types of trading or in the types of trades that I take. I have more boundaries for the trades that I'll take. I have more boundaries for, I've recently created more boundaries for when I will accept taking trades, especially considering the spreads that randomly happen around 5 o'clock or before five, right? Um, what other boundaries do we have? We also have boundaries for what kind of current currencies will trade in some way because I don't want to say I want to completely take AUD and ZD out of my trading plan, but I was low key considering it just because of the spread. My gosh, the spread opens up tremendously. Um, but I mean, other than that, if we look at the if we look at the average hold time, still 6 hours, which is fine. I mean, I'm not gonna complain about, that if my whole goal here is to be a swing trader. Um, what else are we looking at? I mean, this is unbelievable. Max consecutive losses, the highest number of back to back to back to back to back L's trading record trading record recorded without a win in between. Isn't that crazy? I've taken 45 losses before, back to back to back to back to back. That is wild. I don't think it gets worse than that. But I would imagine that was earlier this year, not around this time, because I have had some wins in between. Um, I mean, overall, if we were to look at back at our dashboard, um, what can I say? What is this? Um, I mean, the only way that I can improve at this point is pretty much go based off of go ex go what I might do is, oh, another thing, I want to give you guys an idea. So what I did was because I think 604, and I was actually considering this trade right here because this would obviously be a fire risk to reward. Like if you look at the 3 minute time frame from here, I could honestly take this for like a either a 1 to 4, or I could even take this trade right here for a 1 to 7. So I might actually jump in. It's 6 o'clock. The spreads might have went down by now. Um, yeah, the spread went down. So I might consider this trade risk five. So risk $5 for, it looks like if I risk $5 for 16, that might get us, I mean, that's a 1 to 3. Honestly, honestly, don't even want to do it for $15. Like I've already screwed up so many times on this, account that I don't feel like risking 1 to 3. Like if I want to revive this account, I'm either gonna want to invest more money or look for a higher risk to reward. Look for higher risk to reward setups. I did want to give you guys an idea though. So I came up with this idea yesterday and I'm like, how is it that I can find a way to remove like the emotional connection that I kind of have with the candlesticks? So what I did was I did an inverse color coding of my candlesticks. So let me know if you guys spot anything different. So you can see that I reverse engineered the colors for high and low candles. What I did was I changed the up candles to red, and then so that it doesn't give me a negative connotation, or a negative, it doesn't really trigger my negative emotions for when price goes up, because at least I know price is going up when it's a red candle. Now, if I'm looking at the down candles, price is blue. And if I see something blue versus seeing something red, then in a way I'm actually kind of comfortable with it, if that makes sense. So, um I think that kind of mitigates the emotions, the negative emotions that happen on a lot, like an emotional scale, if that makes sense. But I mean, I've thought of that yesterday. Hopefully, it could help with you guys trading. I mean, it kind of helps for me, but this is actually a reasonable trade that I can get into right now. It's a 1 to 3. Um, I might just go for it, guys, because realistically, there's nothing really else to lose right now. I mean, it's right now it could give me like a 1 to 4. So I entered. Spread's not bad. AUD CAD is going in our direction right now. Potential on that account is plus 28. So make $28, almost $30 on that trade. I might throw in, since our equity is at, I think yeah, it's at $100. It's at 106. Since our equity is at 106, I might just throw $50. Get the equity back to where the challenge is intended to be at. So still turning 160 into $1,000. Um, Good thing, I didn't say within a week, 2 weeks, 3 weeks, 4 weeks. Good thing I didn't give it a limit, because if I did give it a limit, then that would have caused emotional damage. And I still have stuff to work on. This obviously shows that I still have stuff to work on. Um, I don't know. Maybe. maybe I'll keep AUD NZD in the watch list. All right, maybe I'll do that. What's crazy is AUD NZD might be going in our direction right now. So it is a far way down though. For AUD NZD, honestly, this is a far way down, right? It's a far way down. And not only is it a far way down, this just tells me it's gonna take a long time to get down there. But I mean, could be worth 1 to 6. Like, I'm not trying to be greedy, but I mean, 1 to 6 is reasonable. Don't get me wrong, 1 to 6 is not bad. Another thing I'm not an advocate for is that Trade Locker will show us a whole completely different setup on Trade Locker versus TradingView. Like, why is that? What I might start doing though is um focusing a little bit more on the commodities like gold or indices like US 30 and Nasdaq. Obviously, since you guys have been watching me, you know that I'm trading NZ or NZ. I'm trading Nasdaq more than I'm trading US 30, right? Um, so since they correlate, they kind of correspond with each other. Not 100%. I'm not saying that they trade the same exact way, but they do correspond, um, and fluctuate a little bit, pretty similar to each other. What I might do is I might also, no, I don't want to really confuse myself. Yeah, I'll just keep Nasdaq in my trading plan. I'm not gonna throw US 30 in here. I don't want to get, you know, I don't want to get US 30 involved. So, hmm, even though I kind of wanna, I'm not gonna lie, I do kind of want to. Well, I mean, if we were to mark up, if we were to mark up, I mean, we can see that the daily time frame is shows us that we're bullish. So not only are we bullish on the daily time frame, we're also bullish on the 4 hour time frame. So with us being bullish on the 4 hour time frame, wow. Because if the 4 hour time frame has uh if the 4 hour time frame has its low right here, but this is an invalid low. And if that's an invalid low, that would mean this is our valid high. So if that's our valid high and price wants to do a pullback and price has already broke structure on the 30-minute time frame, then what does that mean for us? I'll tell you what that means for us. So what that means for us is that based on the fact that we have a 30-minute, you know, 30-minute pullback, that would mean, mm, should we trust a 15-minute pullback or should we trust a 30-minute pullback? So firstly, what I want to see is I'm annotating this real quick. Okay. So what I noticed is we have to look at specific candles. So this is a high, right? And this is our low. Oh, I also took away EMAs. So there's no EMAs. So since this is our candle, we have low key, I mean, we low key just might make a new high from where we're at right here. So, but if we don't make a new high and we get price to close below this low right here, then that would mean that, we're going bearish, and that should mean that we should get a pullback so that we can re-enter, pushing price back down to at least 50% of the 4 hours range. So that would be a setup for external to internal from the 4 hour time frame on US 30. That's a trade idea right there. So I would keep that in mind. I set my alert for there. Um, AUD and ZD, I'm not really trading it right now. I'm just gonna make it red. It looks like a good setup, but I've traded it way too many times this week. It makes me uncomfortable. I'm just gonna sit this one out. I'm not even gonna talk about gold. Move that to the bottom. USD CHF. I'm still expecting price to get up here. Like my alert is still untouched. BTC USD. At this moment for BTC USD, I'm still waiting for, a shift in market structure. Um, I mean, all we need right here is for candle to close below 108,448, and then we can probably consider price pushing up to sell down to 50%, right? But until then, we can't really do anything. So right here, I mean, we've got GPY. We've got the daily bullish. We've got 4 hour that has created a new high. So now this is our high. And then we just really want a structure shift down below. So if we can get price down below, perfect. But I like highly see, like there's literally no imbalance here. So I really wouldn't be interested, but I mean, if price wants to take out this low right here and give us a shift on lower time frames, then I mean that's fine. Um, for I mean, daily's bearish. Has 4 hour gone bearish? 4 hour, 4 hour has. Hmm, this one's actually interesting. Um, gosh, I'm trying to figure this one out. Honestly, I think price is still bullish. Yeah, I think price is still bullish. So I would say right now price is probably dropping to the 50% until it makes a. I mean, I don't think that price is bearish until we get price to close. This is an interesting one. Honestly, I would say price is honestly, really don't think price is going to be bearish. I think price is just going to be bullish. We just got a movement on BTC, so I'm gonna move this up, so prepare to see some more movement on BTC USD. We could probably anticipate when do the okay, so 4:12, 4:12, 8 o'clock. So 4 o'clock, 4 in the morning, 12 o'clock, 4, 8, 12. So 12 a.m. is when the 4 hour time frame, 4 hour candlestick closes. And for 12 o'clock, for this 4 hour candlestick to close, never mind, 30-minute time frame, because we're doing external to internal on the 4 hour time frame. If we're doing external to internal on the 30-minute time frame, we're gonna want a shift here. So if we can get a shift at this point, we just need price to close underneath 108, 426. All right. If we can get price to close underneath 426, 108, 426, then what we can do is we can look for a retracement. And what I might do is I might just have uh an order placed, place an order, and pretty much just wait for price to do the retracement from right here to 50%. So that's what I would expect for, to happen. So hopefully that can, excuse me, hopefully that happens. Mm, GBP USD might just take off without us, but we'll see. Euro USD never gave us what we wanted, but played without us. Still waiting for CAD JPY. There's a possibility that it's headed to give us an opportunity. Um, Next Monday, maybe, might just really be retracement, week. It might be a retracement week. Um, I mean, there was an opportunity to get in earlier today. Not that you can't still get in for an external to internal, but if there was a time to get in, it definitely would have been in the morning today, because that would have been a really good opportunity. The risk to reward on that would have been perfect, literally. Look at the would have been perfect. 1 to 8. Hmm. All right, what do we got? We've got USD CAD looks crazy right now. USD JPY closed. It did not close, which means price should drop down here. I'm like literally waiting all week for price to drop down here, but it's fine. What are we? We're bullish. So if we're bullish, we're making bullish pullbacks, bullish pullbacks, bullish pullbacks. If we can get a bullish pullback here, I mean, 4 hour time frame, I think is 4 hour time frame pullback. Can't even tell. I mean, it's hard to say because so much structure. All right, so if the daily is bullish, we need to be bullish on the 4 hour. So we went bullish on the 4 hour. I mean, the 4 hour is bullish, so I'll do 50% of the 4 hour. And then hopefully I can get something reasonable so I can take it to just here. It's a good area of interest, but who knows if price is gonna get that low. I mean, honestly, I probably expect this to be. We'll see what happens. Yeah, this trade right here doesn't seem like something I'd want to get in anymore. And then, like, let's say I don't get in because I haven't got in. A lot of times, if I don't consider a trade, because I've been in it several times and got wicked out several times, all you'll see is a candle go straight to take profit. And at that point, I'll just go to sleep. Literally just go to sleep. Like somebody's watching. Mm, well, that's pretty much everything that I want to share with you guys for today so far. Um, like, comment, subscribe, follow. Uh, Thank you for watching and thanks for following along. Keep on looking out for these these different parts that I'm putting out there to give you guys, um, updates on how this journey is going. Um, I'll consider throwing, I'll consider throwing 50, well, the account's at 105, I think. So I'll consider throwing probably, I'll consider throwing $60 into it to get it back to 160 in equity so that we can maintain the 160 to $1,000 title. And yeah, that's pretty much it. I'm gonna change my psychology like I've been doing, working on my psychology because my mental is not where I want it to be at. I'm not consistently sticking to my system. There's also things that I'm refining to sharpen my skill set in trading, mentally and emotionally. And um I have been doing a good job with risking 5% on my trades, except for the time that I did over leverage this week. So I will take accountability for everything that I'm doing. Obviously, I'm paying the price for it since I'm reinvesting back into the account, which I don't want to do. But I mean, that's another reason why I'm not throwing thousands of dollars into a trading account because I can see from a third person perspective that I wouldn't trust myself with thousands of dollars in account. So until I can trust myself with $100 in account or, and building $100 to hundreds of dollars in an account, then until then, I will not put any more than, you know, what I've currently been putting into an account, which is only 100 or $200. So, hope you guys enjoy the video. Comment, let me know what kind of ideas you guys have or what you liked most about this video. Let me know what you think about the quote that I shared earlier by Mark Douglas and join the Discord so you guys can follow along. There's not really anything else other than what I've already shared with you guys that I change regarding my system. So far, my system consists of risking risking 5%. Wow. So risking 5%, trading. I don't want to say trading during kill zone times because there's times where literally kills. I mean, like I wouldn't consider Asian session as kill zone times, but sometimes market moves during Asian session. So I wouldn't really abide by trading during kill zones, but sometimes you can get a really good entry um during Asian session. So I would say I've really been doing good at waiting for price to give us, a solid um risk to reward. So risk to reward bare minimum 1 to 3. Bare minimum. Now, with this being said, we go back to BTC USD, you can see the 30-minute time frame has shifted. So now what does that mean for us? Now what that means for us is alls we need is 50% of that range to get hit. And then boys, we enter. So what would that look like for us? Well, I'm glad you asked. So that would look like a 1 to 3, right? So that's literally bare minimum of what we're looking for. So I would consider this, and I don't remember where I was writing my notes, but man, and I wish this was live because then I can ask you guys where I put my notes. Oh, wait, this is not it. I'm not sure where I put it. Oh wow, it was literally a decad. Risk to reward bare minimum is 1 to 3, right? So we've got 1 to 3 risk to reward. We've got risking 5%. We've got waiting for MSS, market structure shifts. We've got confluence of the daily and 4 hour direction to trade with the trend. Now, this is controversial because if we were to put into perspective this BTC USD trade, right? The daily time frame is clearly bullish. Not only is the daily time frame clearly bullish, But what's also clearly bullish? The 4 hour time frame, right? But what do we want? We want a pullback, right? And if we want a pullback, price can either pull back to this 50% right here, or even down to these imbalances down here. We've got about one, two, three imbalances on the 4 hour time frame. So I would say that, I mean, I'd love for price to go down, into here. We don't always get what we want. So what I'll do is I'll invest the $60 back into the business, right? I'll invest it back into the account, make the account back at 160. I got the alert now for BTC USD, right? For us to get the best bang for our buck, we're gonna want price to get pushed up, hit our alert, and then we're gonna drop down to lower time frames. Typically, 2 minute, 3 minute is like the sweet spot for us to get a market structure shift. We throw in the stop loss, and then we target the 50% of the 4 hour range, right? So that's what we could do. That's the goal. That's the plan. Um, Not sure if this is gonna happen overnight. Um, Hopefully I don't miss this trade. What I could do is I could place an order limit. So when price gets to that 50%, boom, we get in. Stop loss is already there, and then take profit is already there. But I don't know if I really want to do that because a lot of times price goes even further than 50%. You see what it did on gold. It'll go further than 50%. And then, we get a better risk to reward, maybe one or two, you know, full ratios higher than what we'll get here with the limit. But also sometimes we get wicked out, hits our stop loss and then smaller time frame shifts and then we get headed into the right direction. But it's a lot of information to retain. I know it could be confusing for people, especially if you're new. Um, this is just a lot of what you have to go through. You have to go through everything, filter out the losses so that it leads to more wins. And you don't have to win every time. You don't even have to win most of the times. What matters is the risk management. So that's why we've got to put a limit and respect the limit. I will respect the limit. These words are spells. These words, I swear, these words are spells. So if I tell you guys that I will respect the limit, respect the trading plan, respect that I will risk 5% on my trades. I will risk a bare minimum of 1 to 3 on trades and look for only 1 to 3 ratios on my trades. I will wait for market structure shifts. I will look for confluence on the daily and 4 hour directions, which again does not, it's not always like that because BTC USD is bullish on both the 4 hour and daily. But if we have an indication to do a pullback before going back up, then we might take it, right? Because there's no other trades to take. We're already in this AUD CAD trade, and we're at like a 1 to 2 right now, or maybe a 1 to 1, barely a 1 to 3. It's a 1 to 4. I mean, we're actually at almost 1 to 2, yeah. So yeah, I mean, this is a 1 to 4. It's actually a really good trade. Um, Spread actually wicked me out this day, Wednesday. Spread wicked me out. I would have been taken out, right? But I re-entered because the spread was just sick. Like the spread did not want us to win. Took me out probably somewhere like I don't even know, but the spread took me out, so I had to re-enter. Um, again, also respect the amount of times we consider, or I consider, right, re-entering a trade. At most two times, right? At most two times. Um, like there should be no reason why I'm entering trades more than two times. The only reason is maybe if it's a 1 to 10, right? If it's not a 1 to 10, don't enter three times. If it's not a 1 to 10. Um, I'll definitely implement something that has a limit for probably, I mean, that could be something to consider for 1 to 10 trades, then bare minimum three times, maximum three times, for re-entries. If there is a reason why you got wicked out. So confluence of the daily, I'm gonna put situational, right? Situational. What else? So I will risk 5%. I will risk a bare minimum 1 to 3 um for the ratio. I will wait for market structure shifts. I will situationally trade in confluence with the daily and 4 hour time frame. And I will ignore, I will respect the market structure shift, the initial market structure shift that happens within our area of interest, within our area of interest. So this is our system, this is our, you can call it philosophy, philosophies. I mean, this is like a, this is literally our path to crop firm challenge W's, live account W's, does demo account W's. This works around the clock. It's universal. So, I mean, this is literally, it doesn't get any better than this. And I've spent years, I spent 6 years with stuff like this on my mind, and I'm still, it's like I comprehend the process, but the delayed gratification has been 6 years. So I still have urges, if that makes sense. I still have urges leading me to over risk, over leverage. I still have urges to go for maybe a 1 to 1 or a 1 to 2. Barely though. Like there's hardly ever I'll go for a 1 to 1. Like things like that, it's like qualifying someone, qualifying your girlfriend or qualifying your boyfriend, having bare minimum standards. Like if you have poor communication as a girlfriend or boyfriend, then why would you even consider this person as your partner? You know what I mean? Um, that's like the great thing about pre-qualifying your trades. They have to go through underwriting. They have to be underwritten. And when you're underwriting, this is the underwriting process. So my underwriting process looks like this. And with my underwriting process, what I'll do to help is I'll get a case. So I'll get a brand new case and I'll get on my brand new case is going to be a clear case. Now, on my clear case, I'm going to write down all of these rules. It's going to be my philosophy. And with my philosophy, I'll be able to look at it every single day until I'm blue in the face and it sticks. And I mean, literally nothing, like, there's no reason why I shouldn't be adhere to my philosophy. because I've gone through the rut. I've gone through all of the mistakes to lead me to creating this stuff. Because it's almost like a filter to wealth, filter to directly lead me in the path, to lead others into the path of success. So, thank you guys again for watching. I'll show you guys what I mean, I don't even know if I really need to buy a case. I can honestly write on a piece of paper, write on a piece of paper, and then I can tape it onto the back of my phone, and then just every time I pick up my phone, I can just look at it. There's also a method that somebody came up with, which was like having a card or something like that, writing on the card or something like that, and then just being able to portably look at it every day. Um, but yeah, thanks for watching. Like, comment, subscribe, join the Discord, and thanks for watching.